Americans need to earn 70% more than they did 6 years ago, pre-pandemic, in order to afford a median-priced home, according to Realtor.com. Still, there are signs that things are slowly shifting towards a buyer's market, even as we face affordability issues. For more on this, I'm joined by Danielle Hale, who is the chief economist at Realtor.com. Danielle, great to have you as always here. So where are we starting to see some of those shifts that it might be becoming a home buyer's market?
Yeah, thanks for having me, Brad. So we did see the number of homes on the market climb in our April data, but home prices continue to rise, which really hits at that affordability challenge you were highlighting. We found that if we looked at the required income that it would take to afford the median priced home for sale, it is up to $114,000. As you noted, that's 70% more than what you needed to earn just 6 years ago to afford the median price home. So this is really just putting hard numbers on the squeeze that buyers are feeling in the housing market today.
How have we seen this impact some migration trends? Where and the regions that are seeing more of hotspots in order for affordability to be a reality for so many potential buyers?
Yeah, so we know that housing tends to be higher priced in large urban areas. But when we look at regional trends, we are seeing more affordability in the Northeast and the Midwest, not the biggest markets, but often outside of those biggest markets. And people are looking for that affordability. So that's keeping markets like in Toledo, Ohio in the Midwest, or Manchester, New Hampshire, right outside of Boston, very, very hot with the real estate market relatively competitive because they either have more affordable homes or relatively more affordable homes. Manchester in particular is a lower price market than Boston, for example. But when we think about where we're seeing more homes for sale, we're seeing a lot of increase in the number of homes on the market in Southern California, Northern California, and also the Washington, D.C. market saw a big jump in the number of homes on the market in April. So we are seeing more homes hit the market. That is going to help position buyers in a better spot when they're trying to negotiate with sellers. But this has really been a long time coming in the housing market. We've had an undersupply for a very long time.
And so I kind of asked that question to set up this next question, which is how does that overlay with what we're seeing in employment trends, and specifically coming back to this data point of Americans needing to earn $114,000 a year, 70% more than pre-pandemic to afford a median price home. Is it happening right now on kind of a broad-based scale? And, as people are trying to get approved for mortgages, does it feel like that is sustainable in getting that wage increase that's going to allow you to pay over 15, over 30 years?
Yeah, I think that's a great question. So one of the things that we're seeing is that it's harder for first-time home buyers to get into the market. If you look at the homeownership rate data that came out from the government not too long ago, the homeownership rate fell overall, and it was really driven by declines for the youngest households. So getting your foot in the door as a first-time home buyer is hard. Repeat buyers have fared a little bit better in this housing market, in part because they can leverage the equity that they've built up by owning a home over the years. So we're looking at some really differentiated performance depending on who you are in the housing market and whether you own or don't own already, and also where you are. So more affordable markets, it's a bit more competitive. In less affordable markets, we're seeing that repeat buyer able to make a move, but not so much from the first-time home buyer.
I wonder what you're anticipating and watching closely for, especially on the interest rate policy side, as that will influence what we see in the number of buyers, potential buyers who are feeling confident enough to make sure that they're getting a good rate. And then additionally, for sellers who are sitting on existing homes right now, but are locked in at a pretty good rate.
Yeah, because sellers have such good rates right now, or potential sellers, I should say, we do see a lot of people choosing to sit out of the market. I think the threshold for an existing homeowner deciding that now is the time to make a move is a lot higher because we're looking at market mortgage rates that are up in the high 6% range, whereas a lot of homeowners have mortgage rates that are under 4%. So it's a really big hurdle to decide that you want to move in today's housing market when you've got such a low mortgage rate that you're locked into. For first-time home buyers, you can't control mortgage rates. And so I think accepting that reality is the first step. You can take mortgage market rates that you see today and set a budget, but I think you should plan for some volatility because we have seen a fair amount of it. So set your budget based on where mortgage rates are today, but consider what might happen if mortgage rates were to move up 0.5% or down 0.5%. And also prepare for the things that you can control. So think about the things you can do that will lower your mortgage rate. You can save up, make a larger down payment, or maybe tweak your home price target so that you can get a larger down payment with a lower priced home. You can improve your credit score. And most importantly, shop around among lenders because that's where you have the potential to net the biggest savings on your mortgage rate.
Just lastly, Danielle, while we have you, we know that it was a stale housing market, as we were calling it, to end 2024 and closing out last year. Now that we're through the first quarter in 2025, how is that stale housing market transpiring? Are we still seeing listings sitting on the market for a long period of time, prompting some of the sellers to, pull their price down?
We are seeing somewhat more price reductions, and time on market is growing relative to last year. But I think if you compare this market to the pre-pandemic market, it's still relatively elevated. So I think your experience of today's market really depends on what your comparison point is. But I think we're likely to see a little bit more activity later in the year as a lot of the uncertainty that both buyers and sellers and consumers, generally speaking, have had to deal with from a policy perspective. As that uncertainty ramps down, which I hope that it will, that should make it easier for everyone to navigate the market. Because we remember buying a home is the biggest purchase that many people make. And when you think about your monthly budget, your monthly housing costs are the biggest budget item for many people. So they really want to get this right. And that's hard in an environment of uncertainty.